Good morning, everybody. I'm sorry for the late start. I was live, but not on the Hutt Valley Covid-19 page. So my apologies to all of you. For the two people that were watching beforehand, you would have heard the first couple of minutes, but here we go. I'm Karen Smart from NZHL Harbour City, based very happily out of the Chamber of Commerce, 15 Daly Street in Lower Hutt. I'm a registered financial advisor. The advice I'm going to give you today is going to be of a very general nature. Any specific questions should be directed to your bank about your own mortgage. As a registered financial advisor, I have a disclosure statement which Hannah can give you a copy of. She can email it out to you, or you can contact me in a message after the session. I will also email it to you. As a silver partner of the Chamber, I think the Chamber does an amazing job, and I think these forums that I've been logging into have been great, and they're there to answer any questions that you may have about your current situation, COVID-19, wage subsidies, or wish holidays, and anything else that might be on your mind in these very challenging and interesting and different times of working from home and juggling everything that we juggle as business owners, or just as mums and dads with kids. So what is a mortgage holiday? So normally a mortgage holiday is for 3 months. Now what happened last Wednesday is the government sat down with the 4 major banks and they put together this rescue package. So in this rescue package, you can have a 6-month mortgage holiday. Now it is for people that have been significantly, their income has been impacted by this. So A, they've been made redundant. B, they're on the subsidy. So not on 80% of their wages, because their employer can't afford it, or not on 100% of their wages, okay? So if you have been impacted by your income, you need to reduce your expenses, a mortgage holiday might be a good option for you. So the package is designed for those people who have faced job losses, and these situations are very real. I'm dealing with these people every day, and it's a difficult time for people with their incomes and not knowing what happens next. So that's why the government has stepped in to help us reduce our expenses. One of our largest expenses is our mortgage. Okay, so what is a mortgage holiday? I've heard comments that the government is paying my mortgage, that the bank is paying my mortgage, that it's free money. Now, none of those things are actually quite true. The government is not paying your mortgage. The bank is not paying your mortgage. What actually is happening is that you are not paying your mortgage. If you apply and you're approved, then you do not pay your mortgage for 6 months. There is no principal payments and no interest payments. However, there is a cost. The interest payment will be added to the loan at the end of the 6 months. So your mortgage will go up slightly, will go up by the interest payments that you haven't made over those 6 months. Okay? And banks are doing it differently. Okay, so some banks are extending the loan term. You know, your loan term could be 25 years, could be 30 years, could be 20 years. So your loan term is the term you took the loan out for. So some banks are extending the loan term. Okay, so that your current payments remain the same after the mortgage holiday. So that's banks extending the term so the payment remains the same. That's some banks. And another bank is doing the opposite. Another bank is increasing your loan payment slightly by the bit that you've missed the interest, so that your loan term remains the same. So you need to check with your bank if you apply for this, you're approved, you need to ask your bank what happens at the end of the 6 months. It's very important that you know at the end of the 6 months whether your loan term is extended and your payments are the same, which is kind of easy because you just get on with it, or the loan payments go up because the term isn't extended. Have you got a little bit extra, or will you have a little bit extra to pay the extra payment at the 6 months? So a good question for your bank. Okay, I'm going to give you an example for the maths people out there. I don't know how many maths people there are out there, but just basic maths. I hope it won't be too confusing. On an average loan of $350,000 over 25 years. Okay, so $350,000 over 25 years. The interest per month is approximately $1,752. That is using 3.5%. Okay, and so if you carried on paying principal and interest, you'd be paying $1,752. Okay, So if we had a mortgage holder on that loan, the interest for 6 months that you wouldn't be paying would be $4,392. So at the end of that loan, $4,392, that end of the loan holiday payment, my apologies, your loan has increased by $4,392, so that's the cost to you. But we do know that right now that life isn't perfect, life is difficult. You might need, if you need the loan holiday, please ask for it, okay? If it's going to get you through this time, please ask for it. The process of applying is very simple. Every bank is doing it electronically. There's nothing to sign. You just email the bank. They complete a form. They send it through. They're approved. So please ask for help. That's why the government is doing it. That's why the government said, hey, if it's only 3 months, let's do 6 months. So please ask for help that you might need. Okay. So the bank should have a calculator to work out which one is best for you, whether mortgage holiday is best for you or whether interest only is best for you. Okay? So we have talked about mortgage holiday. So just to recap, a mortgage holiday is under the current system is not paying principal or interest for 6 months. So that's, but at the end of the 6 months, interest is added to the loan. Okay, so just interest added to the loan. If you want to know how much interest you pay versus how much principal you pay, please check your bank statements. Now, a second and less severe option is to go interest only for 6 months. So that means for 6 months, again, you don't pay the principal, but you do pay the interest. Okay, so then the loan doesn't actually go up. So if you pay the interest for 6 months, you continue paying the same payments on the same loan, and therefore, and in the example I gave you, where they were paying a loan of $250,000 and the principal and interest was $1,752, then the interest saving on that example would be $732. So if you want to save just your interest on a $250,000 loan, you'd be saving $732 a month. Now that might be enough if you're on 80% of your income rather than 100% of your income. So obviously check out your numbers so that you know what is best for your situation. It's not a one size fits all. Okay, so which one is right for you? Okay, so firstly, there's 3 things that you should do. There's lots of help out there, lots of calculators. Sorted.org.nz also has some good calculators. There's good stuff on our website, www.nzhl.co.nz. So there's 3 things I'd like you to do so you know what is the right thing to do at this time. So firstly, look at your income. How much has it reduced by and for how long? If you're sitting at home on 100% of your income working, your income hasn't reduced. Okay, if you're sitting at home on 80% of your income, or 60 or 75, or whatever your employer has said, I have got is the right amount of income that they can pay you. I mean, the government has said 80%, for 12 weeks. That's what the subsidy is. So how much is your income reduced by, and for how long? And right now, what are your essential expenses? Right now, your essential expenses are food and power. Okay. And how much are your expenses reduced by? We've been in level 2. In level 4 for 2 weeks. I know in my house, my daughter, I've got an adult daughter who lives with us. Her expenses have reduced dramatically, and she paid off her credit card in full on her last payday because she had this money that she wanted to spend on other things. And myself, I've saved $1,000 in 2 weeks just because we're not doing our normal spending pattern, because we are following the level 4 guidelines. So your income is impacted, but also your expenses are reduced. So work out what your income is, work out what your expenses are, and obviously work out if you need to have the mortgage holiday or the interest only. So look at your income. Look at your income versus your expenses over the next 12 weeks. Okay? Secondly, look at your loan payments. Are you paying more than the minimum payment currently on your loan? Now, if you are paying more than the minimum payment to make it to pay it off quicker, you would then want to reduce the payments back to the minimum. Okay, so just ask your bank, say, hey, look, what are my current payments? Is it more than the minimum? Can I reduce back to the minimum? And the bank will say yes. We put payments up and down all the time. Okay. Thirdly, which one is best for your situation? So this is not a one size fits all. You need to talk to your bank about your situation. In a very general guide, if you have a newer loan, okay, so you've taken your loan out for the last 0 to 5 years, okay, you'll be paying more interest than principal. So an interest-only holiday might be enough to reduce your expenses at this time. Okay, if you have an older loan, so you're 20-year mark, the 19-year mark. If you have an older loan, you'll be paying more principal, so you may need the mortgage holiday because that stops the principal payment to reduce your expenses. Okay, so that is the option. 6 months mortgage holiday, okay, which is not paying principal or interest, but interest is added at the end, so there is a cost, but it's a good fit for right now. Second option, interest only, that reduces interest, so you're only paying the interest, no principal for the 6 months. Now that's a very general guide. I'm happy to take any questions or anything else that you might want to ask. Someone did ask me yesterday about moving house. I have got clients that were due to move house today. Now, they had done everything that they needed to do before we got to level 4. So they'd done everything. They were just sitting around waiting for the settlement date, which would have been today. Now, yesterday, the person who was buying the house couldn't do the pre-purchase inspection, okay? Because they couldn't go from their house to the house they're buying to go and do that. And then people that are selling, well, they've done everything, the documents are signed, they cannot get a moving truck to move to them because it's not an essential service. So it is very difficult to buy and sell a house at this time. Okay, the only house you may be able to buy is one where you don't need to move in, but you're an investor buying a rental, and there's no actual movement on day of settlement. The Law Society has said that any settlements should be 10 working days once we are in level 2. So most settlements that I'm aware of are on hold. See your lawyer about that. I'm happy to take any questions that you might have at this time. Okay, I'll just see if I've got any questions. Okay, I can be contacted on 04 979 9155. Okay, thanks, team.